Hey, Nathan Watt from Watson and Watt. Again, today's video, we're going to talk about profit. So, previous videos, we talk about sales. How do we make more sales? What sales you need to make the profit that you want? And today, we want to look at, well, how do we make more profit? Because sales isn't always the answer. So, your profit obviously comes from your profit and loss statement, which is a pretty simple document. You have sales at the top, and then you subtract all your expenses, and what's left over is your profit or loss. So if we think about it, how can we influence our profit? Well, we can increase our sales at a faster rate than we increase our expenses, or we could decrease our expenses and keep our sales the same, or we could do both. And that's the broad concepts of it. You think, well, Nathan, that's only 3 different ways. Is there any other way we can do that? Well, yes, we can. We break that down. There's actually 4 levers to profitability. And the easiest way to explain all this is an example. So this calculation here will run through the different levers and what they actually do, and how we can use them together to actually make an outsized contribution to your profit and your profit growth. So the 4 levers are obviously volume, cost of goods sold is an expense, and overheads. So these 2 are expenses, and these 2 are sales related. In a previous video, I talked about how do you make more sales? Well, volume and price, and that's true. And the other levers are obviously expenses. So how do we play with these, and how do we design our business to move these levers to give us the outcome that we want, and that it's sustainable? So to do this, we just need a bit of information that you will have from your system. So in this example, we have 10,000 units sold a year. Now, that could be cups of coffee, it could be t-shirts, could be hammers, could be tax returns, whatever you do, whatever you sell. And the average sale price, excluding GST. So all these numbers exclude GST, because you're in business, you need to think of it excluding GST. So that gives us obviously sales of $1 million, cost of goods sold of 40%, overheads of 400, net margin of 20% or $200,000. So good stuff. This doesn't include tax, so don't worry about that. So what happens if we're going to go and we're going to sell some more stuff for this awesome idea or marketing campaign or whatever it is, we're going to sell some more stuff. Let's have a look at a 1% increase in the volume sold. So we've increased the number of units we're selling from 10,000 to 10,100. Haven't changed the prices, haven't changed our overheads. But what you'll notice here is that because cost of goods sold are a percentage, they also increase by the relative amount. So your gross profit also increases from 600 to 606,000, same amount of overheads. So you make $6,000 more profit, which is 3%. That's not terribly exciting. And you think, well, why would I bother? Well, what happens if we also somehow change our cost of goods sold? We change suppliers, we change the way that we package it, we change something in our business so that we can reduce the cost of goods sold cost per unit by 1%. So now your cost of goods sold is 39%. You're also selling 1% more of stuff. That will give you a gross profit of 616,000, and your overhead's still the same. So all of a sudden now we're at 216,000. So these 2 combined, an extra $10,000 just from doing this one. An extra $10,000 to your bottom line by reducing your cost of goods sold by 1%. So if you can get your goods for $99 instead of $100, that will give you an extra 10 grand based on this business. Now let's have a look at overheads. What if we change our overheads by 1%? So this is a decrease in overheads, a decrease in cost of goods sold. So our overheads now go from 400,000 to 396,000, and nothing else has changed. So you're saving $4,000, so increasing your profit by 4 grand. Now, if you can't find 1% of savings in your profit and loss statement, I don't think you're looking hard enough. There'll be subscription software, stuff that you're paying for that you could find 1% of your overheads. Now, 4 grand isn't a lot, but it does give you, a week at the beach per year. So don't write it off altogether. Now, what if we do price? Now, 1% of price. So we're selling the same amount of stuff, we're just selling it for $101. That puts an extra 10 grand of sales, but it doesn't change our cost of goods sold because we haven't changed the number of units we're selling. So that $10,000 flows all the way to the bottom line. That's a 5% increase just by changing your price from $100 to $101. Amazing. Now, all of these things, 10 grand, 5 grand, 4 grand, who cares? But let's have a look when we use them in unison. So we're going to increase the number of units sold because we're awesome salespeople, and our marketing and our viral TikToks and whatever's. We're going to find 1% savings in our cost of goods sold by using regular mail instead of express post or something. We're going to find 1% savings in our expenses, and we're going to increase our price by 1%. Now look at what happens here. We've increased our profit by $30,200, which is a 15% increase in your profit. An extra 30 grand before tax by changing each of these levers by just 1%. Now you might say, well, I can do better than that. I'm going to increase my prices by 5% because inflation's out of control. You go, okay, all good. $70,000 more profit by changing. We increase the volume sold by 1, decrease our cost of goods sold by 1%, overheads by 1%, but we put our price up. That's amazing. And you might say, well, actually, if I put my price up 5%, I'm going to lose 2%. What does that do? Well, that sucks. You're selling less widgets, but you put your price up, so your profit is still up 50% or 25,000 or 25%. Even though you lose some customers, the increase in price and the savings on the expense side more than compensate for that. So these levers are incredibly powerful. They give you a very good insight into your business about what you should do and what strategy you should pursue. So I really encourage you to map these out, have a look for it in your business. If you need some help with this, let me know and we can run through this together. But these levers are the only 4 ways you can influence your profitability. So if you want to increase profit, yes, it's a function of sales, price and volume, but it's also a function of expenses. Now, which levers do you want to pull based on your strategy and your business and your customers and their appetite for things? That is incredibly important to understand so that you can get these outsized results by making very small changes to certain areas of your business. Till next time, thanks.